Hey traders, my evening recap. I haven't done one of these for a little while, um, but basically, you saw in the afternoon hours that we had a massive run up that last hour in trading today in the S&P futures, and tomorrow we know is OPEX. And basically, what I see happening here, the big money forced squeeze into the market maker move for the week on the for the ES, and basically right after hours we tagged that S&P high market maker move, and for 23 weeks now we haven't broken above the market maker move ranges, and they're playing the odds going into OPEX tomorrow that since we've tagged it that they can negate a lot of their risk that we're going to have a breakout to the upside and capping some of their risk. And basically, they wiped out the put holders today in today's session, and now tomorrow they're hoping to cap out the upside potential in the S&P in the SPY going into tomorrow. And keep in mind, about 60% of the order flow happens in the SPY. And that's exactly what I see happening here, that they're trying to cap out, mitigate their risk going into finishing off the January expiration of the options market. And that's exactly what caused this squeeze into the close on the ES futures and the SPX. Okay, and I called that in the early morning video that was exactly what I was expecting into the evening. We didn't quite make it there, but I think I'm more of a factor of running out of time than anything else. And you know, the S&P futures, they continue for another 15 minutes after the normal markets close, and that's exactly when it happened. They just ran it right up into that market maker move, and now they're going to do their best, darndest, to pin price at or below that price for tomorrow. And since we have completed a pattern, and they've pretty much wiped out the puts today, you know, if anything, there's a strong likelihood that we're going to have some selling pressure tomorrow if the markets decide to go lower on OPEX day. Now that same rule for the Qs doesn't necessarily apply. It just, for 23 weeks, it's held up for the SPY. The Qs have been having a lot more relative strength, and they have broken out before. And basically, we poked our head today on the daily. We have poked our head above this market maker move. So we really didn't poke our head way too high. So that's just something to keep on your mind here. Easily come back in and finish the week the 9100 doubles. That's 45 points. You know, that's nothing in the grand scheme of these markets here, and so just keep that on your watch here. Now, if you know anything about volume profile theory, you see how we are reaching above our weekly volume profile going into the closing moments of the trade today in the Qs. This is it's not a supportive pattern to the upside. I mean, basically you want a bell curve on that's your weekly there. But if you look on your daily as well, and that's 30 minutes or lower on the Markowitz thing, and zoom in on your volume profile here, and you can see exactly what I'm talking about. You see how the profile, just basically very little action up here, and we had our distribution all day long down here. In the same way on the weekly, it's showing the same thing. It's a very poor volume profile. This is like a baby B profile, and that is not a supportive profile for prices going into the next trading day, generally speaking. And basically, we all know that's they push prices all the way up here so they can tag the S&Ps to get it all the way to the very top today, and that way they can, like I said, mitigate their risk going into tomorrow's expiration. So just keep that in mind, kind of what I'm looking at here on the like the NDQ, and then the Russell. If we go on it, 5 minute, It's more evenly distributed. They didn't really do that with the Russell, but the big thing about Russell today is if you go out on daily here on your Russell, we just completely blew. Uh, let's see, up in. See, I had to use the IWM 1 second here. It shows it, but we have completely blown out of our market maker move for the week. Give me 1 second here. And IWM. Okay, and we go to our weekly webs. And as you can see, right here was where we were supposed to, the 167.44. That's where the market makers had anticipated the high for the Russell this week. And we are building out nice value support on a breakout of the expected moves for the Russell. Very supportive of higher prices in the most speculative areas of the market. So that's a very good sign for the markets seeing something like that. And so just keep that in mind. And going forward here, a lot of the times you might you'll see something, a breakout move like this, and then come back a day or two later and back test it before a big move, a much larger move higher. So just keep that one in mind. That's a pattern that's common, and but we are putting in. This is a continuation weekly pattern. That means that typically this does not mean the upside auction is over with for the Russell. So that's something to keep in mind. That's why I'm kind of leery of saying that we're going to roll over in the SPY or the Qs tomorrow, since we've tagged the upside of the market maker move, seeing how much strength we're actually seeing here in the Russell here today, and that might translate over into tomorrow's session. Some stocks that I'm got on my watch list, one for definite is Amazon. We're still negative for the year for Amazon, so just something I'm definitely keeping on my watch here. I think it's that's what my thing was. No, that's the market maker. I'm sorry, that's the open for the week. But Amazon, they're kind of keeping it pinned here, down low here for this week so far. Kind of thinking what's going on here with Amazon. We got the OPEX tomorrow. I think they're trying to keep prices suppressed here on Amazon into the OPEX, and we might actually start seeing a breakout move in OPEX next week, or maybe later tomorrow on Amazon. They've been keeping this. This thing should have been running a lot sooner than that, in my opinion, especially crossing above that trend line today. So that's just something to keep on your watch, that Amazon is setting up to the long side, in my opinion. Something that I'm watching also is Netflix. You see how tight this range is for Netflix this week? This is a very atypical trading range for Netflix. So just keep that in mind. This is developing out for next week. This is easily going to break out to the upside or downside come Monday if this range persists into OPEX, OPEX into next week. So this is one of those patterns that I think is really wound way too tight to be going into next week, and it's poised for a major breakout one way or the other. And if you go out so far with the Disney and Disney Plus and all that stuff, I'm not too impressed. They're just not putting that much content out. That's going to be a major problem for Netflix, in my opinion, in the near term. As you can see, we have this inverted head and shoulders, and we're right here up here at this neckline area. I do think there is a decent odds that we are going to start filling this gap here in relatively short order. We got the earnings right here on the 21st, so this is going to be quite interesting. These markets continue to be strong. I mean, a run up into earnings does not seem out of the question. And you have this trend line up here, and if you extend that to the right, that would be a nice little target. Very nice targets up here for Netflix to the upside into earnings, in my opinion. Apple continues to flag out here, and what can I say? I think 330, 335 has most of the analyst targets for Apple, and it still has quite a bit of time into earnings. So it'd be 128. So you got another week and a half for Apple to potentially run up another $10 potentially, $10, $15 into earnings. That is a definite possibility. And if our monthly is at the high end, so value is being accepted at higher prices on our monthly. If you go out on your daily or your weekly value, as you can see, very tight pattern. This is basically a bull flagging pattern that is poised to have an explosive move because of how tight the pattern is this week. So just keep this in mind. This is OPEX. Very good chance that they're just going to pin prices right here, and then we are going to have a major breakout up or down on Apple come the first of the week, or possibly even the end tomorrow in trading tomorrow. Adobe is another one. Values being built out on the monthly at the top of the range. If you go down on your time frames here, values being accepted almost at the top of range here for Adobe. Building out sideways, a relatively compressed range up here, setting up for a potential move to the upside, it looks like to me. Baidu is another one from my scans. See how the monthly values have been accepted right up here next to the highs. Same here. This is the second month in a row of the same scenario here on Baidu. And if you go down on your weekly webs here, you know, this could be the China names since the trade deal signing have kind of been a little bit out of the favor. So we did have a little bit of weakness last week. This is what this value area is. It was developed out last week. And a little bit more weakness this week so far. So just keep this one on watch for next week of a potential reversion to the upside on Baidu, in my opinion. Facebook is another beast. As you can see, we've had tight ranges before. Basically, you see the value has been completely completely accepted at the very top end of the range here for the month so far. And so just keep this one in mind and look what happened this week. Look at this range compression. It's just epic how tight we are getting here for Facebook. This potentially for a rocket ship move if the markets were to catch another leg next week. So just keep that in mind. These very tight trading ranges that are setting up here, despite the markets breaking out to all-time new highs, these are either topping out patterns or just preparing for explosive moves for further higher upside. And honestly, I couldn't tell you which is the case. The way this market's going, I don't know if it's even anywhere close to being done. But just keep that in mind. That's another pattern which I have on my watch. Salesforce, this here has just been a beast since its earnings. It's been building out sideways here, and value's been accepted at the top end of the range. So just keep that in mind. And what I'm looking at here, you see how value is building out for this month right at the very highs of the range. So far this month price is getting accepted right at the very tippy top highs, and we did catch an upgrade today on Salesforce, and this basically looks like a bull flag pattern to me to the upside if the markets do continue to hold. Yeah, I'm going to finish up with one of my darlings to trade, and that's Tesla. And as we can see for the monthly, we've got an expanding range, but you still don't have that real tight accepted value right here at the top of the range, and it hasn't been that way at all from the beginning, from this big run up. So, you know, that right there was a warning sign to me for Tesla on the upside. And then we had that bad news came out today in the headline. But and as As far as this week goes, price is being accepted down here at the 502 area. As of today, the accepted VPOC migrated down substantially, down to 502. So now 502 is basically what investors are willing to accept for a price this week for Tesla. So that is something to keep in mind going forward here. I know these uber bulls on Tesla. Well, this whole big run up was a major short squeeze, just driving it and driving it and driving it. And in my opinion, the short squeeze is done, and we're just getting back to normal trading for Tesla. And those periods like with Beyond and Tesla, you know, they're awesome periods when it happens. But whenever that short squeeze is over with, it typically is over with for a very long time. So Tesla is one of those I really do think the short squeeze is done for. So good luck trying to continue to push it to the upside. I'm not saying it's maybe done. It may be going up another $100. I don't know, but it's going to be a lot harder to advance from here, in my opinion. If considering I believe most of the short squeeze has been fulfilled. Okay, like the video if you like it, and leave me some comments below, and share your ideas at the bottom of the video if you don't mind. And if you have some stocks and stuff, you know, put the tickers in. I really appreciate it, and you can leave your emails if you want, and I'll get back with you. Thanks a lot for your time, and hopefully this can help you guys out. I can't wait for tomorrow. I don't plan on trading much at all tomorrow, being OPEX, and if I do, they will be next week expiration. Okay, and so just keep that in mind. There is a lot of IV built into this week's options. Despite the fact that the VIX seems like it's suppressed, there's still a lot of implied volatility in these options that are going to get bled out heavy tomorrow. So just keep that in mind. Be very careful trading this week's lottos. Thanks a lot.